two giants dominate the US stock market: the New York Stock Exchange and the Nasdaq. Both are home to some of the biggest companies in the world, but they're very different in history, structure, and the types of companies they attract. In this video, we'll break down the key differences between Nasdaq and NYSE, from how they operate to listing requirements to the kinds of businesses that choose them. The New York Stock Exchange, or NYSE, was founded back in 1792. It's the oldest and most prestigious stock exchange in the world, often associated with tradition and stability. In contrast, the Nasdaq launched in 1971 as the world's first electronic stock market. With no trading floor, it brought in an entirely new era of digital and technology-driven trading. While both are stock exchanges, their operations are very different. The New York Stock Exchange runs on a hybrid model, combining electronic trading with a physical trading floor on Wall Street. Brokers and designated market makers help manage trades. The Nasdaq, however, is completely electronic. Trades are executed through a computer network, making it faster and more efficient. The New York Stock Exchange is home to many of the world's most established corporations in industries like finance, energy, retail, and consumer goods. Examples include Coca-Cola, JP Morgan Chase, Walmart, and ExxonMobil. Nasdaq, on the other hand, is known as the hub of technology and innovation. It lists some of the biggest tech companies in the world, including Apple, Microsoft, Amazon, Google, Meta, and Tesla. Listing requirements also differ. The NYSE Big Board has stricter standards, typically chosen by big corporations seeking prestige. Companies must show at least $10 million in pre-tax earnings over the last 3 years and meet high shareholder and market value thresholds. The Nasdaq offers greater flexibility through a tiered system with various standards. Companies can meet its listing requirements starting with $1 million in pre-tax earnings for Nasdaq Global listings, while a Global Select listing requires up to $11 million. Nasdaq divides its companies into 3 market tiers. Nasdaq Global Select Market, the top tier with the highest requirements, home to giants like Apple and Microsoft. Nasdaq Global Market, mid-sized companies with strong records such as Logitech and JetBlue. Nasdaq Capital Market, smaller companies and startups that meet minimum governance and financial standards, including $750,000 pre-tax earnings. This also includes many early-stage biotech firms. When it comes to size, the NYSE leads in total market capitalization, thanks to its roster of blue-chip companies. The Nasdaq, however, often beats the NYSE in daily trading volume, reflecting its dominance in fast-moving, tech-driven stocks. The New York Stock Exchange is viewed as the gold standard of stability, heritage, and credibility. Many global corporations pick it for its prestige. The Nasdaq is seen as innovative, dynamic, and forward-looking, the place for disruptors and high-growth firms. In the end, the New York Stock Exchange and Nasdaq aren't just exchanges. They're symbols of two sides of the financial world. The NYSE represents tradition and stability, while the Nasdaq embodies innovation and growth. Together, they drive the global economy, connecting investors to opportunities and companies to capital. Whether you lean toward blue-chip reliability or the excitement of tech innovation, both exchanges tell the story of ambition, risk, and progress.